What's poppin', SE family? So in this video, I'm going to be showing you how to place your SL and your take profits, right? And I'm going to do this predominantly on US 30 and NAS 100 because those are what I trade every day. I specialize at US 30 and NAS 100. That's if you guys know me, if you follow me. I mean, the fact that you got this course is because you know I stay killing those markets, right? I'm going to show you how I place my TPs and my SLs and at which points do I take profit off of certain trades. So let's get into it. All right, so very simple. Here's an example we need to use, right? We have a zone over here that price is reached. We have a zone over here, right? We have a resistance, price is about to go down, right? This is off the indication that we already know where this trade is going, right? We know where this trade is going. It's going to sell. All right, you know it's going to sell. I mean, you've placed all your positions, right? You know this is going to sell. So now you want to know where do I place my SL? What is proper risk management? Proper risk management off the bat. Proper risk management is basically, your risk to reward ratio. So you cannot be risking $100 trying to make $150. It makes no sense. It makes no sense. It has a really bad risk to reward ratio because you're risking a lot just to make a little $50. It's still good risk in the sense that if you do win the trade, you do make an extra $50 as to what you could have potentially lost. However, that's not good R&R when it comes to trading Forex. What you want to do in Forex is basically say risk $30 on a trade with the potential to make $150. That's what you want to basically do. That's good R&R because the potential return versus the actual loss is really, really high. So that's going to be very good for you because you don't want a situation where you take two major losses where you're risking really badly. That's what blows accounts, that what kills accounts, and that's why most people fail at Forex because they don't know how to use proper risk management, right? And what you want to do is always know how to use your proper risk management. So you always want to make sure that you get the best possible entries, and this requires skill, patience, and watching the charts every now and again, checking up on them because you don't want to, just catch a chart moving and have really tight SLs at the same time. You don't want to have tight SLs because having tight SLs basically you get out of trades very quickly because expect volatility, expect pullback, expect drawdown. That's what you always have to expect when trading. So I'm going to show you how I determine where to place my SLs and what has worked for me very much for like the last 6 years. So I'm going to show you basically how I do it with proper risk to reward as well. So look at this particular trade, for instance, right? We want to take this particular trade. It's hit our level of resistance. We got a lot of bullish momentum going down. It's selling, fine, right? Point of entry will be right over there, of course, right? That's our point of entry. Now we want to find basically, let's start off with the SL. So we have another point over here where price has reversed on, right? We have another point over there. So let's place it up nice and easy. So this is our point of entry. Right now, if you're gonna enter, say like number one, I recommend only trading US 30 and NAS 100 when you have $300 and above. And this is just my recommendation. You can do as you please, of course, but I recommend only $300 bare minimum and above because a lot of people want to trade with $50. These are crazily volatile and they will kick your ass. I just want to be very clear with it. It's very, very dangerous to trade with little amounts. I don't even trade that with $300. I always make sure, well, now my accounts are a couple 100,000, but I don't trade it with $300. If I'm doing a strategy or those videos where I'm flipping accounts, you see I usually start off in Forex pairs if my account's below $300, and then once it reaches about $500, $1,000, I then move on to like NAS and US 30. So where I'm gonna place my SL, basically for proper R&R, right? I'm gonna place my SL between these two levels, right? Let's even if forget this level right here is above. We said we have this zone. I'm gonna place my SL a little above this level. And the reason I'm placing my SL a little above this level is because if price decides to, like as I enter, decides to pull back, there's a potential it's going to pull back and hit this level again, respect it, and then proceed on downward, right? There's always that possibility, right? The possibility that it could just maybe come down a little bit, but then go back and then come down, right? That's the possibility. However, if I decided, maybe let me do this. Let me just put my SL on the actual line, then you see how that's no good. The price could just go and hit the line is right there, the level of resistance, and then come back down, and then I'm out of the trade because I decided to make my SL too tight. So I have to give my SL some breathing room, right? I need to give it some breathing room just to make sure that I'm always safe in my trades and I'm never taking out too early. So usually with majority of trades, that's exactly what you want to do, and vice versa if you're taking the long position, right? So you're taking the long position, say even you caught price like right over here at this point in time. We'll mark it up real quick. So of course we have it touches over there, right? And then we have that level right below. Even if you were taking buys at this particular point in time, by the way, for those of you that don't know, when we refer to long positions, that basically means we are buying the markets, or we're taking buys. When we refer to saying I'm taking a short or I'm shorting the market, we are selling. So just so you guys, a little quick terminology for you so you know, and you know when your trader friends are talking, you don't always feel left out. So if I say I'm doing a long position, I'm buying. If I'm shorting the market, I'm selling. That's basically it. So say we're doing a long position, right? So we're doing a long position over here. This our point of entry was right over here on the spike. Whatever is happening, our SLs, right, are either gonna be a little below because this level is very tight. It's way more tight than this this level right over here. It's way more tight. So what we want to do is basically we could move our SL just a little below this previous level, just for the fact that price could, you know, buy a little bit but then come down to this level just to touch, because this was a pretty significant area where price had touched, and then proceed on upward. That could happen. So you always want to give your SL some breathing room. A lot of people want to stay safe. They want to try to make $10,000 but only risk $50. That makes no sense to me at all. That is not good R&R. You're just being scared in the markets. And these markets, the second you're fearful, they will kick your ass, and that's just that. So you can't place it over here because, you know, strong area of support over here. You know, we have price playing here a couple of times, and if you want to place it in between there, that's way too tight. Even you will be able to see that that is just way too tight for what you're trying to make. This is what you're risking, way too tight. So what you want to do is just place and give it some breathing room off the potential areas it could touch. And the reason we didn't do the same over here is because this is our point of entry, and also the distance between, of course, these two areas. There's a lot of space, there's a lot of room, you know? So even if price does come over here and breaches through for some odd reason, then the trade's a bust. We're out of the trade. And if we think we wanna, you know, re-enter trade, then we can wait for it to go up over here before initially going down. But because there's a lot of breathing room between these two, our SL is very much fine at this area above this area of resistance. So what's important is give your SLs some breathing room. Now, when it comes to TP, on US 30 and NAS 100, when it comes to TP, I take profits at 3 different levels: 200 pips, 400 pips, 600 pips. This is basically 20 points, 40 points, 60 points, right? And the reason for this is that at 200 points, I'm securing a small amount of profit. 400 points, okay, I'm doing basic profit. 600 points, I'm securing majority of my profits. And then if I'm holding any more positions, then I'm usually holding with fewer positions, right? So if I open 5 positions for 5 different TPs, you best believe that I've secured majority of my trades. And then if I'm holding for the next 4 TPs, then I'm basically just securing partials as I go. But majority of my trades are closed at the 600 points, 600 pip mark. The reason for this is that at 600 pips, no matter your account size, you're making good money. If you got a $300 account, you're making $60 at 60 points usually. You're making about $60 at 60 points. That's very good money, especially for that account type. And if your account is bigger, say it's $3,000 and you're trading a little higher, you're making about 600 points at that particular point in time. So 600 pips is usually my golden mark where I secure most of my profits, and anything after that is extra. So how do you also determine certain areas to collect your TPs, right? Support and resistance areas, basically. So if we're selling, I'm looking at this area to secure some profits, you know, because it's, you know, it's an area where price has touched and respected. And because we did have this little consolidation, I can mark with the top or the bottom. It's up to me, really. I'm also looking at this area to secure some profits. And then over here, down below, I'm looking at this as another area to secure profits. These are all just potential areas that price could go, and that's basically why I'm using them to secure my profits, right? Or as areas where I expect pullback as well. I mean, these are areas where I do expect a little bit of pullback. That's what it is basically all about. So I determine where I'm going to collect certain profits based upon previous areas of support and resistance, depending on where price is trading at, right? And that's basically it. That's basically it. Very simple how to place your TPs and your SLs. SLs need some breathing room. Don't make them too tight because you're going to be taking out a trade too early. Take profits, 20 points, 50, 40 points, 60 points. So that's 200 pips, 400 pips, 600 pips, and then anything else is extra when trading. Because I am a day trader, not a swing trader, so this is why I'm only teaching day trading strategies. Basically very simple. If you want to know potential areas where you do want to take profit, then you just look at the support and resistance of price, and then those are the areas you can determine where to take profit. So that's basically it for me, team. I'm gonna catch you guys in the next video. I hope you guys learned a lot, and yeah, love you guys. Peace. And just before I go, check it out. You see, those are just areas you go and you take profits. Do you see how it respected the areas? It breached it a couple of times, but the area we did mark up before, significant, it does respect. So you always know that I'm going to take profit share. I want to re-enter there. That's basically it when it comes to trading Forex.